The following is a local resident producers program. The program content is the sole responsibility of the producer and does not necessarily reflect the views or policies of CATV2, Oshkosh Community Media Services, the City of Oshkosh, or Time Warner Cable.
Hi everybody, welcome to Eye on Oshkosh. Cheryl Hentz and Dan Rylance here, and we did a show like this I think probably about a year or two ago, but we thought it would be a good idea to do another one talking about the real estate market, what it's doing right now, as well as what the real estate financing market is doing. So joining us tonight, we're very happy to be joined by Jack Damel, he's a broker with Addison Jones, and Scott Waterworth. You're with Associated Bank, and what's your position there, Scott?
I'm the residential lending manager for Oshkosh and Fond du Lac.
All right, excellent. So we're going to talk a little about what's going on in the real estate and home lending market. You know, one thing, home sales continue to recover in Wisconsin, although I don't think people probably feel like they've recovered nearly enough because they're either not able to sell their property or they're not getting the value that they thought, you know, that they put into it and feel that it's worth. But in July, home sales rose about 17% compared to the same time earlier, 1 year earlier. What are you hearing in the real estate industry, especially locally, Jack?
Well, and I guess I like to always look at everything locally. That's just really the way real estate markets seem to be anyway. I think we're pretty fortunate. The Oshkosh and the Fox Valley, we've always been a fairly conservative market to begin with. I don't think that we've taken the hit as hard as other parts of the country, certainly, but we've felt it.
Yeah.
But things have been gradually getting better. The low interest rates that are out there have been a big plus. I think if you did not have that going for you, it might be a different situation out there. Maybe the biggest concern we have out there is just buyers themselves. They hear so much negative about what's going on that they're not really looking at, they think they can't buy a house when, in all honesty, a lot of them probably would qualify for a mortgage these days and be able to buy.
Okay. What is you always hear about median home prices. What's the difference for our viewers? What's the difference between a median home price and an average home price?
Well, your average is taking everything. That's the whole big pool of homes that have sold over the last quarter or year, wherever you want to look at. Mm-hmm. And they're saying, what's the average price? That's generally going to be a little bit lower than your median. Your median is kind of like your bread and butter. What's the normal home that's sold out there?
Okay.
So that's a little bit higher than what the average comes out to be.
And of course, normal is very subjective. It depends on how big your family is and
Yeah.
how much square footage and where you want it and that kind of thing. And so 17% is what they're up on a statewide basis from 1 July to the next. What about locally? How much have home sales increased locally?
Locally this year, I believe, if you compared year to date, we are up roughly around 10%, 9-10% over last year at the same time.
Okay. All right. Why don't you jump in, and then I want to delve into this a little bit.
Kind of look at an overview. What price range properties are selling and who is buying? Is that a fair question?
Yep. The price ranges that have done fairly well have been some of your upper price ranges because it's been able, what has to do with the low interest rates.
Yeah.
Folks that are, that they came through things well, they've got a few dollars in their pocket. It's a great time to you know, if you're going to move up in a home because prices have slowed down, it's a great time to buy a bigger house. So some of your stuff up, you get around 200,000 and better, moving fairly good. Probably the toughest area out there, and homes are still moving, but where we've seen a problem has been in that around that 80 to 120 range. Those have been impacted more because of foreclosures out there, that type of thing. Those have kind of, you know, made it tough for those folks in that price range.
For either one of you, are we still seeing, you know, for a while, we heard a lot about short sales. And if you watch a lot of HGTV, you always run into these short sale situations. Are we still seeing a lot of that now?
I think you're still seeing some of that. I think it's slowed down from maybe where it was. You can maybe speak to it better than I can, Jack, because you probably see that on the closing side on sales more than I do. But I think it's slowed down somewhat, but you're still seeing it. We still run across that and have to deal with that situation, just because the values aren't back up to where they were in previous dates.
Sure. And a short sale is where somebody is having to, the bank has basically said, we're going to foreclose on you. Or have they foreclosed on them? They can't sell it for what they owe.
Right.
On
It's basically where the mortgage that they, or the amount they owe on the property is more than what they're going to get out of the sale of the home. And the bank is basically agreeing to accept that amount for the sale, or take a short amount for to release the lien and let them sell the house.
And we always hear about how short sales can take forever to close because you're having to, you know, get the homeowner, the current homeowner, to accept the offer, as well as the bank to accept the offer.
Yeah.
How long does it normally take to close a short sale?
It depends on who the lender is. In many cases, I think you can probably plan on an extra 30 days for closing, possibly in many cases.
Yeah. Best case scenario and if it's a local lender, is usually about, it's probably going to take you at least 3 months from start to finish. That's best case scenario.
Okay.
And worst case scenario is a year spent and nothing happens.
That's not a good situation.
No.
Second half of my question is, who's buying? Are we talking higher percentage of first-time buyers? Are we talking people that are moving up to a second home or a third home? Can you quantify that at all?
I don't know, Jack could probably speak to this better than I can, but I think we're seeing quite a few investors buy, people with cash that are taking advantage of the
Has
pricing.
equity, they got a good price on a second house?
Or they're buying investment properties, or they're
buying.
people with cash and can take advantage of buying those properties that have the value at a good price.
Okay.
I think we're seeing in the bank we're seeing a fair number of first-time home buyers that are coming in and buying, and there are, like Jack said, the people moving up and taking advantage of the good deals out there. So,
Can you run through, if I walk in as a first-time buyer, what do I have to have down for a down payment? Is it's set now by laws above you, or is it still got some wiggle room?
there's different loan programs out there that require different down payment amounts, and that's kind of some of the misinformation I think that's out there.
He was saying, yes.
That people think they need to have 20% down to buy a house today, and that's not the case.
Okay.
You can still buy a home on a conventional fixed rate mortgage with 5% down.
Okay.
There's also options for 3% down with a fixed rate mortgage, or 3.5% on an FHA loan, or if there's a lot of veterans out there now that qualify for VA loans, and that's no money down on a purchase with a VA benefit.
So each of those other categories, I'm sure, have certain hoops you have to go through to get into those categories?
Oh, sure.
Yeah.
And it's, you knew, one thing that's changed maybe from years past is that you do have to have good credit. There are some options out there too. If you've had some things in the past and you got things straightened out now and your credit's back on track, you should probably talk to a lender and see where you are. And find out, where your credit score is, where you need to be to get that kind of financing set up. So,
Are the interest-only loans gone finally? I mean, are there still some around? Or
locally, I don't know of anybody that offers them.
I have not done any in
yeah.
some time now.
I could never believe that in the end it was going to work.
And that's
And it
something
didn't.
you have the local banks here in Oshkosh that didn't really get into that kind of lending and came through. And I think, like Jack said, that we're probably a more conservative market, and thus probably came through this whole housing crisis a little bit better than some areas of the country. Not to say that we didn't see values go down and have some struggles and still working through those, but I think luckily we didn't buy into a lot of those programs.
For investment properties, for example, what's the required down payment if you want to purchase an investment property?
That's typically going to require 20% down at least for an investment property. That's going to be a little bit more of a down payment requirement. So,
Is the market for real estate investment, I mean, we touched on this a little bit, is that still kind of depressed?
It's actually one area that's been picking up a little bit of steam now, and this year maybe more than before. For a good stretch, we were just overloaded. There were I can't remember the number. I think it was over 100 duplexes in the city for sale, and nobody looking. Now with the interest rates, you've got some investors that have been coming out picking those up because it's lucrative. They can come in. There's actually most of the landlords I've talked to are having great success with good tenants these days. So they're pretty happy in that respect, and by having lower payments, of course, they can turn a higher profit on their monthly margins.
Yeah. Just speaking of investment properties, I got an email earlier this week. Not exactly sure how this guy found out people's email addresses, but he must have sent this out because it was a blind copy, to me. So it must have been a blind copy to others as well. But he sent out an email saying that he owned a property in town and he's looking to sell it. It's an investment property. And he just it was like an email blast thing that he did. And I thought, that's kind of a creative way of doing this. And I mean, he told all the rental income, he told the updates and everything. But, and maybe he's got it listed on Craigslist too, I don't know. But it was just an interesting thing to get.
I have not seen, I get quite a bit of stuff from other agents who will, and once in a while, a private party will say, I have a house here and I'd gladly pay a brokerage fee if you've got a buyer for my property. We get those types of things, but.
Yeah. Needless to say, I wasn't interested in purchasing it, but.
Maybe talk interest rates a little bit.
Sure.
In terms of, the 30-year fix, 15-year fix, the ARMs. What can you kind of just run through that a little bit?
They're just historic lows right now. On a 30-year fixed rate, we're talking 3.5% for a 30-year fixed rate loan. 15-year fixed rate, you're under 3 at 2.75 or 2.875 for a fixed rate, 15-year fixed rate. These are the best rates we've seen, ever. So, and there's still programs with low down payment options out there with really good interest rates too. FHA loans with 3.5% rates. So,
the ARMs aren't as competitive as they were 10 years ago, are they? I mean, or are they?
Yeah, those are actually real low also.
They are.
So depending on the situation, if somebody's gonna, you're in a situation where you're gonna have the loan for 3 years, 5 years, 7 years, an ARM could be a good option also. So.
Talk to us a little bit about that, Scott, because I think a lot of people are really scared of an adjustable rate mortgage. And, when I bought my first place here in Wisconsin, and it was an investment property, I took an ARM, and it's, people I think have the impression that the payments are just going to go through the roof. But there's a cap on how much they can go up per year.
Sure.
And in fact, half the time, I've owned it now for 18 or 19 years, half the time my payments have come down. I mean, like right now, my house payment is probably the lowest it's ever been.
Yeah, right now on the adjustable rates, those rates are real low. So if you're in an adjustable rate, you're going to have a real low interest rate on that. And the adjustable rates right now are starting out very low if you go out and take one out. And they are, like you said, capped. Typically, you'll see, at least at Associated, our ARMs are at 226 ARM, which means they're capped at 2%. Any 1 year, they can't increase more than 2%. And then over the lifetime of the loan, they can't increase more than 6%. So if you're starting out at a rate that's 2 or 3%, the maximum that rate's ever going to hit, if over the lifetime, would be either 8 or 9%. Again, which is a lot higher than today's market, but in historical measures, that's really not that high of an interest rate on a mortgage. You do have to be aware that once that change date hits, meaning like if you have a 3-year ARM, you're going to be locked for 3 years, and then at that third year, it's going to adjust after the third year to the current market rate. So you do have to be aware that that principal and interest portion of your payment could adjust and change.
The Feds today just said, no change through
2 more years,
2015
yeah.
now. So I mean, that's a fairly safe bet, I think, on a short arm that nothing's going to happen.
Yeah.
I don't think an ARM is adjusted up in at least 15 years.
Yeah, I
think
can't
it-
remember any upward adjustments in a long time. So.
So I suppose it depends on the person, but what advice would you give someone coming in to do with a 30-year rather than 15-year fixed? What criteria would you say they go either way?
It kind of depends on what their situation is,
Okay.
and what they feel comfortable with for a payment and income and things like that. So usually when somebody comes in, we'll do a pre-qualification if they're looking to buy a property,
Okay.
and kind of talk about the different loan options, the different terms and payments, and try to get an idea what they're comfortable with. Usually first-time home buyers, that's usually a big step, going from renting into home ownership and mortgage payment.
Right.
So typically you're seeing those folks usually jump into a 30-year type of product. But we're seeing a lot of people that hadn't been in a 30-year product real long, maybe a couple of years now, are refinancing into a 15-year term because they can drop that rate way down, typically anywhere from 2 to 3% from what they were
Right.
3-4 years ago, and not increase the payment that much. So
Talking about refinancing, 5 to 10 years ago, everyone I talked to, we're refinancing, we're refinancing, we're refinancing. And we did it too. But in recent years, of course, it was much harder to refinance because the values weren't there. Is that coming around a little bit? Do you still see people refinancing? I can't imagine with the same kind of vigor that they once did.
we're still seeing a lot of that
Are you?
come around because of the historically low rates. There's a lot of incentive there to refinance. There is a few more hoops to jump through, and it can be a little bit more of a process than it used to be. And obviously with values out there, appraisals are sometimes an issue with that. So
With interest rates so low, and I have refinanced 3 times. I can't go any lower. I mean, there's no point. So that's another difference where I think there's not as much refinance. I went from 7 to 5 to 3. So I mean, am I going to go to 2.9? I mean, there's no. I've squeezed all there is out of it.
Sure.
So that for me, that would make no sense to refinance again.
Yeah, well, and for some people, I don't think it makes a whole lot of sense either to refinance because you've got the appraisal fee to pay for, you've got the closing costs to pay, and you kind of have to weigh if paying those things are worth the money that you
it's
may be
definitely a
saving.
cost benefit to look at and make sure you're going to save enough money to do that. So.
And if someone's interested in refinancing, is that something that you can help them kind of analyze the cost-benefit
Sure,
analysis?
absolutely.
Okay.
We'll look at what their current rate is, what their current balance is, what the cost would be to refinance.
Okay. Jack, from a sales perspective, a lot of people, because they maybe can't afford the kind of home that they would like, are you seeing that people are saying, well, we'll get something that's maybe a little less beautiful. It's a fixer-upper and or a handyman special, as sometimes they're referred to. Then they start doing some of the work themselves. Are you seeing people do that?
These days I think folks are surprised at how much house they can get, and everybody's got to weigh out their priorities as far as what are you willing to take, and what things do you need, what things do you really do you have to have, versus the things that we all like to have in a house. In terms of fixer up, again, everybody has their own level. I'll have kids come in and say, I don't mind doing a little fixing up, and in their mind, fixing up is painting and maybe a little bit of carpet. You get somebody who's done this and been around the block a few times, and they're talking windows and structural things, and so fixer upper is a pretty broad term, I guess. I don't know. It just depends on the people coming in, and I've had folks come into a house and walk in and say, "Oh my gosh, this isn't what I was expecting. This is a lot more work."
Yeah.
And vice versa. You get the people that come in, they're surprised again that they can buy quite a nice house today.
Yeah. My cousin in Arizona, he buys tons of true fixer-uppers. I mean, these things are dumps. I've never seen such crap in my life. And yet he's, it's not his main business, and he doesn't buy them to flip. He just buys them, fixes them up. He's got a staff that fixes them up, and then he rents them out. And I mean, my God, the stuff that he has gotten out of these ramshackle buildings is amazing to me. But speaking of flipping, do you still see a fair amount of flipping, or not so much?
I guess there's some of it out there, sure. I don't think I'm seeing as much. I don't know if you are, Jack. Or
We're actually seeing a fair amount of it. Again, it gets down to the people that are getting a little experience under the belt. You can, some of the, Scott and I were talking beforehand, some of the things, like if you're buying one of these like Fannie Mae foreclosures, those types of things, they'll usually have a stipulation in the contract that says you can't resell it for a certain amount of time or for more than a certain price within a certain window. So that can be a little prohibitive if you're trying to flip it in a hurry. But if you can get in some of these homes, if they're a nice house and you can come in and do some, probably a little more than cosmetic in most cases, but get them spruced up, those homes do turn over and they can make a profit on them. But they're buying them pretty low to begin with, too.
Talk about foreclosures a little bit, how that process works. And then I have to stop and do something else. We're paving a lot of old streets in Oshkosh. Take the example of New York from Maine over to Hazel, for example. A lot of poor properties close to the Maine area, and most of them are rental properties. I was told that 9 of those owners of the rental properties just walked. What happens when they walk, and do you deal with foreclosures?
Yes.
You do?
Yep.
Okay. And do you deal with foreclosures?
No,
You
no,
don't?
I do not.
Why don't you deal with it?
We have actually a separate area that does
Oh, I see.
collections and everything. I do the
Okay.
origination
Okay.
and that part of the lending.
Okay.
He's the good guy.
Well, he is too.
Well, yeah, but
So-
I mean, in associated,
No,
he's the
but
good
so
guy.
tell
Oh,
me,
they're all good guys,
is
come on.
the different process of buying a foreclosed house rather than
Again, it depends on whether you're talking a local lender or
Okay.
if you're talking like the Fannie Mae or
Okay.
VA properties or FHA. On the federally, again, your big ones are Fannie Mae and FHA and VA. Those are the 3 big ones that we run into
Okay.
where those, it's very impersonal. There's no,
Okay.
I mean, in most cases, you're submitting an offer to purchase over a computer now.
Okay.
Buyers have to be absolutely on the spot with everything. They have to have their letter of approval or pre-approval from the bank. Everything has to be ready to go. They won't look at any type of contingencies, other than some basic things like they'll allow you to do inspections, those types of things. But then they'll turn around and say, but if you find anything you don't like, we're not fixing it.
One bid only, or can you?
No, they'll take in
They'll-
multiple
they'll
bids.
take multiple bids.
You got to have, the buyer's got to have kind of the nerves of steel to go through the process on it, because you have a chance of getting a great house at a pretty good price, but other people see that too, and so you're going to have competition out there.
Time lag is longer than normal?
No, they actually speed through those pretty good right now. They've got it down. They're doing enough of them, they should be able to do it fast.
How many
by now.
foreclosed houses are there in Oshkosh?
I know our office, we probably are handling anywhere from 20 to 25 at any
Okay.
given time.
Okay.
And that's just our office.
So multiply that time 5 or 6, we're probably talking a couple hundred.
Yeah.
Yeah. Is that down from a year ago, or?
I think they're moving through faster.
Okay.
Turnover's a little faster on them right now.
Okay.
But unfortunately, I think there's way too many. But
Yeah.
it is
Are the
what it is.
prices, I mean, are they way down?
In some of these properties, yes.
Yes.
Some are considerably lower. You see some of the higher end homes that are coming through are great prices on them. I mean, compared to what they were just a few years ago. So,
Okay.
What about like
Question.
online auctions? I've been hearing more about online real estate auctions. Are these a good idea, or?
I have not done any of the online. Some of the auctions, every once in a while they'll pull a block of properties off that have been up for sale and they'll send them through an auction. I'm honestly a little confused because I'll see them sell for prices lower than what they had offers on, and how they come up with this stuff.
Yeah. Those are in-person auctions that you're accustomed
Those
to
are
dealing
generally
with?
the in-person. I have not done any of the online auctions per se.
Yeah.
It's
I'm seeing signs around town for one company in particular, and they just seem to be getting a ton of stuff, not just from around here, but all over the country, in the Midwest for sure. So, let's talk a little bit about home equity loans as opposed to home improvement loans. Are they the same thing? Are they different? And if so, how are they different?
Basically, the same thing. It's basically the distinction is what they're using, what you're using the money for. If you're using the money to improve your home, people call that a home improvement loan. Home equity loan is using the same equity in your house to purchase maybe something different. Maybe you're using that to buy a car and deduct the interest that you're paying on that purchase. But basically the same loan, same products, same interest rates and that kind of thing.
And
So-
interest rates are good for those loans as well.
Yeah,
Yes.
very good.
Yeah.
So if you want to improve your home rather than sell it and buy something different, Jack would like us to not do that, but
no, that's a good thing.
but a lot of people may want to do that. Just kind of start sprucing things up, but they don't necessarily have the equity built up in their home to be able to get as much money as they might need for the improvements they want to make or total remodels. What kinds of lending products are out there to help them?
Well, on the home equity side, there's home equity lines of credit, and that varies from lender to lender, bank to bank, as far as how their terms are set up. Typically, you'll find that they'll go up to 90% of the value of the home on a home equity loan. And that's something that you can set up as a line of credit, basically. Those rates right now are very favorable because it's tied to the prime rate, and prime rate's very low. So it's a very affordable, very good product to use right now.
Do you still have to have an appraisal on something like that, though?
It depends again on the bank
Okay.
and the lender. Typically, they do require appraisals.
Okay. I know we're running out of time here, unbelievable. But I have one question, and I've wondered this for a lot of years, and I've talked to other people who have wondered it too. Someone may get rejected for a mortgage, and yet they're paying the same amount or possibly even more in rent, and they've been doing that payment for several years, and they scratch their head and they say, geez, I'm paying more than that now, and there's no problem. Why won't the bank give me a loan? Especially since the bank has the right to foreclose on the property. Not that you want to be in the real estate market, but you've got something tangible that you can take back if they don't pay. Can you just kind of quickly explain that?
Well, typically on a mortgage loan, you were talking, most folks want to do a fixed rate loan, an FHA loan, a government loan. So there's guidelines that the lenders, the banks have to follow to offer those types of products. Even on an in-house ARM loan, they want to follow the lending products because we're regulated by the government to have safe and sound lending practices. In that situation where somebody's paying that rent, there could be a number of different factors that influence whether they get approved for a loan. Could be credit history. It could be their source of income that we can't verify it in writing. It could be a number of different factors that could affect that. So even though they've proved that they can pay that payment monthly and never be late with it even, doesn't necessarily mean that all the factors will be there for us to get the loan set up.
Okay, all right.
Quick question?
Yeah.
If you're back a year from now, what do you think the market will be like in Oshkosh?
I think we're going to steadily improve. I mean, I see some good things, and what everybody has to remember is 2000, the mid 2000s, 4, 5, 6. We had the bar pretty high. I mean, every day was literally a new record in real estate sales. I mean, prices were going up, numbers of sales were going up. It was pretty wild, and you do hit a certain point where everybody knew it had to stop. Unfortunately, this was a pretty abrupt stop, and
it's serious.
And serious.
Yes.
And the things that happened that kind of afterwards, Could they have been done, could it have been handled differently? Who knows?
Yeah.
You know, that's way beyond my my level of thinking, I guess. But again, over the years, and you know, when I first got in the real estate market, interest rates were 18%. There wasn't a heck of a lot moving back then, and everybody thought that was the worst of times. And you know, we came through it. We did well, and I just think we'll see the same type of thing happening here. I
And
think
things are getting better.
Slowly
Yeah,
getting
yeah.
better, yes. And you know, if you talk with most of the brokers out there right now, I think they're pretty busy.
And
So
interest rates look to be stable and low for at least a couple of years, right?
yeah.
Yeah, I think they will be. That's
Yeah.
all
So
indications.
that's got to be a good thing too.
All right, great. Well, Jack Damel from Addison Jones and Scott Waterworth from Associated Bank, thanks so much for being
Thanks
here.
for
We
both of you
appreciate
for
it very,
coming.
very much.
Thanks for having me.
Thanks for having
We'll
us, yeah.
do this again in another year.
Sounds good.
Just
Very
sit
good.
tight. We're going to take a short break. When we come back, Steve Dedow from the Oshkosh Area School District's Board of Education will be here, and we'll be talking about what's going on there. We'll be right back.
Every year, the U.S. Department of the Treasury receives about 1.4 million reports of problems with paper checks. Checks can be lost, stolen, or delayed. If you still receive Social Security payments by paper check, Treasury wants you to know about a safer, more convenient way to get your money. The Direct Express Prepaid Debit MasterCard. The Direct Express card is new and is available to anyone receiving Social Security benefits, even if you don't have a bank account. Your monthly benefits will be automatically placed onto your card account each month on the day your money is due. While other debit cards cost money, it is possible to use the Direct Express card for free to make purchases, pay bills, and get cash at thousands of locations nationwide. There are no sign-up or monthly account fees. No more waiting for the mail or worrying about lost or stolen checks. Call 1-877-212-9991 or visit www.usdirectexpress.com.
And welcome back to Eye on Oshkosh. Steve Dedow is here now from the Oshkosh School Board, and welcome. We appreciate your being here.
Well, thanks
especially
for
on
having me.
Packer night. But you'll get out of here in time to watch the game, probably. So we got different things we want to chat with you about. But first of all, and we're taping this on September 13th. Just last night, you guys passed the next budget for the 2012-2013 fiscal year or operating year, whichever you guys call it. Give us the short and skinny on the budget. What are some of the more important elements of it? And bottom line it for our viewers. What's it going to cost them on their tax bill?
The tax bill, I think, at the end of the day is going to be $37 on a $100,000 home. We have been able to maintain the programming that we have. We've been able to also launch a virtual e-academy, which will give our students additional opportunities. The fund balance when I came into office was roughly, I think it was $7 million, and that's been doubled now to close to $14 million, which is good. It is now in compliance with our policy. Surrounding districts have like roughly 20%, and we have our policy striving to maintain 10 to 12%, and we are over 12% right now currently. We were able to use some of the budget variance, which was a very positive thing, due to concessions and give backs by the educators and others, and some other things. That huge energy savings for obviously a mild winter and some of the energy efficiency things we did. We had a $3.7 million positive variance. We were able to take a portion of that, I believe it was $1.2 million, and use that to pay the debt for this year's Jefferson payment and this year's Oak Lawn payment. It was originally going to be a little over 7% increase on the property taxes. We thought it was prudent to do that, especially in this economy, because it lowered the tax bill for the local constituents, and that got us to around roughly 4%. At the end of the day, there's some nice increases in there for technology, which I'm very excited about, and I can explain some of that later.
Salaries and benefits, 75% of your budget. What's the skivvy on that?
In what regard?
For salaries and benefits for your employees. What's in the budget for that?
You are right. It used to be close to 80%, which is pretty much normal for any kind of entity like this. And that's been reduced to 75. I don't have the exact figure, but I could pull it up.
No. But last year the teachers opted not to take cuts on their staff for no increase in salary. Are they going to get an increase in salary or it hasn't been decided yet?
You mean for the OEA, the educators?
Yeah.
No, their salary is froze.
Oh, it is for this coming year too?
Yes.
Okay, that's what I was.
2 years in a row they made that
Okay.
sacrifice.
See, I didn't see that.
The other bargaining units, the paraprofessionals and the food service people and the custodians, are all receiving 1.5% increases, but they're also paying an additional amount into their benefit structure.
Okay.
And that'll actually go up to, could go up to 20% starting January 1st. We have something now within our new insurance structure that they need to take a wellness test, and if you opt out of that, then you're going to make 20% contributions to your benefits versus 15%.
Which is up though from the old days, right?
Oh yeah, very definitely.
Yeah. And retirement is they're paying more on that too?
Yes.
Okay, all right, that's.
Okay, well, let's say they take the wellness test and some kind of condition is discovered or whatever the case may be. They don't do so well on the wellness test. What happens then?
Well, they're not going to be kicked out of the program, certainly, and they're not going to be paying more on their premiums because...
So they won't get bumped up to the 20%
No,
then?
no,
Okay.
no. The idea there is to be preventative. We want people to go in and take, like, say, an annual physical and that kind of stuff. It's better for them. It's better for our bottom line because of the insurance provider if we know these things exist. So.
Sure. And if a condition's discovered, well, then maybe you're catching it early. And,
Yes,
and
absolutely.
that too is a preventative
Absolutely,
kind of thing.
absolutely.
So on the tax bill then, $37 per
100,000.
100,000. Okay. Now how does that compare to last year? Do you remember offhand?
Not right offhand. Last year we had a reduction. I want to say it was like something like a 0.5% decrease overall.
Okay.
So it is a 4% increase, but if you look at it in the grander scheme of things, 2% over the last 2 years. Comparable districts, we're still way down on mill rates and other things. We're playing some catch up here, and I think that's being reflected on the reason that our enrollment is going down, which we do have some, I think, exciting plans. I used to be kind of cool, and now I'm kind of getting nerdy. So, but in any event, I think some of these things are very interesting on the way that we're dealing with an increase in our enrollment. We were told last night, at first I heard about it, that apparently Oshkosh has been an isolated community in this regard, but we're going to be receiving quite a few refugee families. There are going to be 16 new enrolled kids going into our school this year. I believe there will be more in January, and I've been told that it could be up to an additional 100 over the next year or so.
That's mainly the World Relief people.
Yes.
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 Yeah.
So we're moving, shifting right now on trying to deal with that because we'll need interpreters for whatever.
Some odd languages
Yes,
they mentioned.
definitely.
Yes.
Just kind of touching on this, since it went up 4%, I know there had been some talk because you guys had a surplus, and some people were saying, well, that would be good to take that surplus and put it into stuff so that taxes could either remain level or come down. In a sense, though, I think by paying off, by paying a year's debt on two different schools, I think in a sense you sort of have done that.
Well, I think what the board approach, we get kind of criticized, irregardless of what we do, we're going to be
Yeah.
criticized. We could have taken the entire $3.7 million and put it against the tax roll, and we could have had a tax decrease. That is not prudent. We would have had $9 million in our rainy day fund. Actually, by putting what we did in there, we were able to save over $40,000 in interest on our short-term borrowing this year. At one point, it was, and I want to say this was like back in 2006, we were paying over $100,000 a year on just interest payments. And that's ridiculous. Why give it to the banks? That should be going into our programming for the kids or building maintenance or something. And this year, I think that's been halved. It's down, I believe Bob projected it out to be 52,000. So those are good things. I think by taking more of a moderate approach on the budget, which was to return 1.2 million to the taxpayers essentially, lowering from 7% to 4% on their tax burden, that was a more moderate approach. It kept the balance of our rainy day fund up. If we do have unforeseen contingencies that come up, and that may happen, like with this refugee situation, we have no interpreters for Iraqi, and where are we going to get the funding for this? That's why you want to have that reserve fund balance, obviously. So I think the moderate approach was the wisest approach in this.
Okay. Anything else on the budget?
No, I want to go to the superintendent.
Okay.
Can I do that, or do you want to do?
No, sure. Let's
Okay,
go.
last night you spent a little time evaluating the consultants the search group that got your new superintendent. You may not want to answer these, but I'm going to ask anyway. Was the hiring of Ted Mack second unanimous because of his strengths or the weaknesses of the other candidates?
No comment. I'm kidding. All the candidates were very.
He's good.
All the candidates were very strong. Each one brought something different to the table. What happened with us was that we'd have like maybe 4 people or 5 people would like this candidate, but 2 like this one better, or 5 people like this one better, and 2 people. When Stan came up, all of us immediately liked him, and we saw what we were actually looking for. We developed the questions for this. The evaluation team certainly guided us through the process, but the questions that we came up with were very ingrained into our local community.
They were board generated.
Yes, absolutely, and there were some good ones in there. We have quite a diverse board actually in a lot of different ways. Each one of us brings strengths and weaknesses to the table. But with Stan, what we all saw was, and what we believe this district needed, was a stabilizing factor, a unifying factor, and the experience level. Okay. The surprise I got out of it, quite frankly, was even though Stan was the oldest candidate, that he was up on technology more than, and how it played into education more than the rest of them. Stan is working for his doctorate right now. He is finished his dissertation on it and is expected to receive that very shortly. A man at 62 going for his doctorate is doing it for himself. He's not looking to step up any farther.
You just stole my next question. My next question was, most school districts of this size don't hire someone without a doctorate.
Right.
You hired someone who's going to get their doctorate.
Yeah, I believe
Close.
by January he will have his doctorate.
Okay, this second one's a little tougher because, we talked about this when you were on before. When the superintendent comes, he ought to bring his family and his wife. Mm-hmm. He's not bringing his wife.
The superintendent has bought a house in this district, which was unlike some of the previous superintendents. His wife has got a contract for 1 year,
right?
Yet in Minnesota.
Right.
I have met his wife, and we can get into that particular.
No, but only gave him a 2-year contract, and his wife isn't going to be here for 1 year.
She is actively seeking employment in this area right now.
Well, he told us that she's committed to teach because this is a really good high school
Right.
in Twin Cities, and she'll be gone for a year.
Right, she is committed and
Okay.
under contract for that particular portion of it.
Okay.
But she is actively looking for job opportunities in this area.
Okay, I hope that works out because that was a thing we talked about with your previous superintendent.
Absolutely.
He came by himself, and that was a
Absolutely.
concern.
Stan has given us pretty much a solid 6-year commitment on doing this, on this.
All right. Okay. That wasn't so bad, was it?
No, not at all. One of the things that, in the short time that Stan has been here, one thing that I've noticed about him is a big difference from Don is Don's had a lot of charisma, a lot of vitality. But the thing that I noticed with Stan is that while we were discussing issues, Stan will bring up, well, we had a similar situation happen back here in 1981, and this is what we did. And that experience, that well of experience is just awesome. And we're able to use and transpose and craft that to our own situations here using some of his experience.
Can I add just a little bit to that?
Of course you can.
Okay. What I noticed is, opposed to any of your other previous superintendents, maybe because it was the makeup of the board, superintendents would sort of sit like this, waiting to be attacked by one of your school board members. And since there's no attack going to him now, he's collegial. He's engaged. He's a conversation person at all your board members.
Absolutely.
And that's a real change.
Yes, it is.
Yeah.
And that's a conscious change that I think that we are taking too as
Yeah.
a board. I mean, the way that we're trying to deal with governance now has been amped up and ramped up
Yeah.
quite a bit from the way that we had been doing things before. And this is a team of 8. It is not a team of 7 versus 1.
That's well stated. Yeah.
All right.
Yeah.
Well, speaking of the way things were done before, you in the past have said that you believe that the board should present resolutions and concepts to the superintendent in a clear and concise manner. And I think all 3 of us can agree that that was not happening before.
Yeah.
Which is why you said it, I think. Now that some of the negative elements on the school board, and even in the constituency, have kind of quieted down and or disappeared, do you see that this is now, that you are presenting resolutions and concepts in a clear and concise manner as a board?
Absolutely. We are, as Chair of Policy and Governance, we've freed up ways, it's called BYOD, bring your own device. With our technology, we brought that to the board, or to the board from Policy and Governance. We redid the superintendent evaluation, a much more in-depth and accountable system than what was brought there. That was board developed. Board developed on information requests versus open records requests to stop the jammage, and over $15,000 being spent on useless requests.
Right.
The board self-evaluation, we never had that before. That has been brought up. Dr. Kelly Saganak, just recently, yesterday, we approved, we're going to take a trial error on changing our meeting structure to have more engagement with the constituency. We're going to have a 1-hour listening session prior to the board meetings with a revolving, like 3 board members and the superintendent or high administrators there. The feeling is, this is used in other districts, is that many of our constituents are afraid to come in front of the camera and talk. They have public fear of public speech, nobody
Public
wants
speaking fears.
Yes.
Yeah.
And we want engagement. We don't want soapbox standing people who have, obviously the public forum is an important element, but if it's just being used for political purposes, we want to understand what it is that's wrong with people's lives or children, what they see are faults, or if they have good ideas, and we want to engage in that, and we think this is one way to deal with this. We're also going to go to a structure of the first meeting of the month will be workshop related. The second meeting of the month will be operational related. This is an outstanding format because right now we have workshops the same day that we vote on things. You need time to reflect. You need time to ask questions. Our community needs time to ask those questions. This gives them a 2-week and us a 2-week window to make these kind of decisions.
When are all these things going to be implemented?
Now. They are. The superintendent evaluation, board evaluation, informational, the bring your own device, the e-academy, all these things are already out. They're the ones like with the board meeting structure were done last night.
Okay, so they will be starting.
October 1st and the board
Okay.
meeting thing, the rest of it's already in place.
Okay, all right. We want to talk about the board self-study, but give us an update on Oaklawn. It's progressing, but tell us how it's progressing.
And what happened last night?
Yep.
With Oaklawn, it is right on. It is progressing exactly the way that it's supposed to be progressing. Before we began the construction portion of it, we hired an environmental consultant, asked them to check our property, and their test came back that there was no concern to date on us proceeding. We proceeded. At that time, there was an opportunity to pursue the purchase of an adjacent property, and we looked into that. We were very adamant, the board was very adamant about having an environmental study be a part of that. a contingent on buying the property. We thought the price was reasonable, but we wanted to have that because obviously there's children involved. And our environmental analysts went over, and there were some concerns that they had about this other property. Last night we decided that we would pass on buying that property. At the same time, the analysts suggested that we maybe do further testing on different parts of our property. And we just said, yes, absolutely, prudent. We have to do this. You know, check it out, see what if there's things on or around surrounding property. You guys have been in the community long enough. There's a lot of things on the north side of town that have changed. I mean, Leo's Speed Track used to be up there. The fairgrounds used to be up there. There's many things that have been on the north side of town that have changed. Now there's Pick and Save up there, all these things. That school has been a school for 60 years, and that's the reason there was no environmental concern found with the level of testing that we did prior to the construction.
You really
portion.
need a little extra space around that school, don't you?
It would be nice, but the way that it is designed and stuff, I think that there will be adequate green space, and we're always looking for opportunities here, but we need to proceed with caution on some of these things, and you know.
Okay.
Was there, I vaguely recall reading something about an additional land purchase before they even broke ground.
Mm-hmm.
Explain to viewers what that was all about.
Are you talking about the options that we presented to the community prior to the referendum? What we wanted to do with the referendum was we wanted to give the community itself, I for myself don't want buy-in, I want ownership by our community on how that we are going to engage in education. What we did was we had a realtor go out and look at various properties that were within like a 1 mile radius of Oak Lawn. Not the 2.5 miles or whatever Riff Road was, that's ridiculous. We wanted to have it close enough to keep that community up there and also integrate the Sunset kids and yada yada. We came up with, I believe it was 3 properties out of like 15 that we were looking at that we thought would be good, would be reasonably priced, if it would, you know, would have what we were looking for. There was one property that rose to the top, a beautiful piece of property. It was like 40 acres, roughly 500,000, 600,000 bucks out by the lake. But that was pushed pretty close to a mile to the edge of where we were looking at. But this is what we had told the community we would do. We would offer these different options. We can either tear the school down and ship the kids here, here, and here. Here's the plan. Here's the B plan. All right, this is how we're going to break the kids up to make them all fit into these buildings. New piece of property. Should we build here? Should we build on site? And it came back resoundingly. I believe it was over 87% of the survey. Build it here.
Yeah.
So that's. Otherwise, like I said, I want ownership from the community. The community, and I think that was really reflected in the referendum itself.
Mm-hmm.
If we would have went out there where we were looking at this property, I don't think it would have passed 72%.
Yeah. So, you know, we're only in the second week of school right now as we're taping this, but how are things going so far with the kids not being in their school at Oak Lawn as they knew it before?
From my understanding, and I've talked to Scott Johanknick, the principal there, and some of the teachers I run into every once in a while, I think the media has been doing a very good job of keeping up on that as well. The big difference here is that those kids are being moved from one building to another building, but they're staying together as a unit. Mm-hmm. So that's not quite as disruptive. I mean, it's one thing, yes, you go to a new building, but if you go to a new building with new people, that's what's really the traumatic issue for kids. Their teachers are there, their friends are there, the walls are painted different. Mm-hmm. And I think that has been a big help.
Okay. Deferred maintenance in some of our other older schools. You know, that reared its ugly head time and time again, one school after another. Schools were talked about being closed and so on and so forth. Where are we at with deferred maintenance in some of these older schools?
Well, quite frankly, I've been on the board now 2.5 years, and this has been allowed to happen over the last decade or so, even farther back than that, that we have accumulated now $70 million in deferred maintenance. And this board right now has voted in, and this will be presented again. It's been presented twice, it'll be presented thrice in our second October meeting, that we are tackling roughly 35% of our deferred maintenance in one swoop. Now here's the list. I can read down the list. They're all critical needs. There's 16 critical needs on there. It represents something like $21,700,000 through energy exemption bonds, which means we can exceed the levy cap by that amount.
Okay.
That was a new act that was put in through the last legislature, and I can explain that briefly. There's boilers ranging from 53 to 72 years old. Now, I'm 57, for God's sakes, if there's a boiler that's older than me, it's got to be replaced. And
Write that down, Cheryl.
so there's
Got it.
like
Oh, we've got it on tape.
there's like 6 or 7 boilers that are going to be replaced. A lot of roofing is going to be replaced. It's all has to do with energy, and the stipulation is that you get your payback on your investment. The big difference, the way that they used to do this, was that if you were going to do an energy exemption, exceeding the tax levy, that you had to do it all in 1 year. In other words, if you're going to borrow $21 million, you're going to have to pay it back, in 1 year. That is, you can't do that to a community. That would crush a community to sit there and have to pay $21 million back. And but with the new act, it spreads out over 20 years. So we're able to, in one whack, knock 35% off of that $70 million deferred maintenance. And I would suggest that is a solid commitment from this board on that project.
Okay. We're just about out of time, but I've got a couple other things here. The self-study, can you just kind of tell us real quickly what's happening with the self-study? And
The self-study is something that I wanted to push on. One of the legacies I would like to leave is that there is no orientation. When I came on board, no pun intended.
Knowledge is power.
Yes, it's here you are, you're on the board, swim.
Yep.
And now we have an orientation process built in. We have self-reflection built in. We have what's expected in etiquette and the difference between administration's roles versus our roles. And I would like to touch on one quick thing here on the technology issue as we're running out of time. We have a new website, which I'm quite excited about. This is just starting. We are one of the first districts in the nation to do this Google-based website. And Chicago is going to be, they have put in 37,000 iPads in their schools. They're going to be sending up somebody to tell us how to do one-on-one technology, and we're sending Dr. Dave Gunlock down there to show them what we did with our website. This is an excellent opportunity for both districts.
okay. And then real quickly, this was a press release that came out last week, and this, the reason I'm asking you is because it involves your union. Collective bargaining was voted on for the International Alliance of Theatrical Stage Employees. What does that union and collective bargaining there have to do with the school board? Is it because of Alberta Kimball?
Yes.
Okay, so setting up for events taking place there.
Yes, there's a small unit in there. I abstain on even going into closed session to discuss it. I remove myself from closed session, and when it is brought up for a vote, I will abstain on the vote.
All right. That was,
You're basically stagehands.
yeah. That's what I thought it was, but I wasn't entirely sure. Anything else real quickly that the people in this district need to be aware of?
Well, I'm going down to Mobile, Alabama with Stan and Mary for a look at we're continuing on with Oshkosh for Education, which is the new, we're going to develop a comprehensive strategic plan based off some very, very specific questions that we'll be presenting to the community. We're hoping to get 10% of the community, which would represent 6,500 people roughly, not 500 of the same people telling us.
All right, excellent. Thanks for being here.
Thanks very much.
We always
Good
enjoy it.
report. Yep.
That will do it for us. We will see you next time. Until then, take care. Keep your eye on us. We've got our eye on Oshkosh.